All right, we're excited to be here today. This is going to be a very awesome session. We are here with the Trax Freight Market Report, pulling in all of our data from September, and we have Steve Beta here, who's going to give us all kinds of great insights into everything that's happening in supply chain around data and how we're interpreting data and all of that. So Steve, welcome. I'm excited to learn from you today. I know we've got a lot going on, so I know we've got a lot of ground to cover in the next 30 minutes. So give us a little, remind our audience who you are for those who are tuning in for the first time. I know we've had a lot of YouTube viewers come on for the first time, and then we'll dive into it.
Well, thanks, Joy. Glad to be here. So, Steve Beta, Executive Vice President at Trax. My main role at Trax is to engage our customers and help them improve their overall programs through an advisory type of role. I pride myself, I guess, a little bit on keeping track of everything that data can tell me, including our customers' overall performance, not only in freight audit, but also in overall cost to serve in their market, relative markets. So, but happy to be here and share those insights and maybe a little bit, I might put my PhD hat a little bit on today and more to come on that.
Yes, I'm excited. So September saw a lot of, when we discussed all of the data from, let's back up a little bit. When we discussed all the data last month, we saw a lot of flattening, right? So there was a lot of kind of normalization, a lot of business as usual. We didn't see a lot of fluctuations in the data, be it cost, be it timing, things like that. I feel like we did start to see a little bit more fluctuation in September, but we also saw a lot of things more broadly, obviously happening geopolitically. We saw a lot of things happen here in the US, and even now in the last couple of weeks. So give me kind of your broad perspective on any trends that you saw, any ways that you think we need to be thinking about this or interpreting this. And I know that we're about to get an exciting lesson from you as well.
Yeah, well, inevitably, I can't wait to talk about my math problem, but my theme for today is the math has gotten harder. And we'll talk a little bit more about that. But just from looking at the data, there's an appearance of a cooling in transportation logistics and overall in the indices that I've looked at. So what does that really mean? That means, and I know there's a little bit of conversation about the price inversion with capacity and pricing, but this is actually a good time for the shipper. I'll be honest with you in terms of pricing, transportation pricing. So pricing isn't keeping up with the changes in capacity, right? That's creating that inversion. And so now, whether you're upstream in consolidated or downstream in small parcel, there's definitely a difference in those two. But generally, if you look at it all, the pricing is still favorable to the shipper. In fact, I read a recent article that there's a thing called a power index that at 50 at midpoint, it's equally balanced. It's now shifted a little bit to the shipper side. So carriers are a little bit behind, if you will, in adjusting their capacity and their ability to react to the market. So, but broadly speaking, I still think this is some fallout from buy forwards from tariffs. So I think that what that did, and that of course raised inventory cost and lowered warehousing capacity, right? Because you had to store that stuff. But because of that, I think that's been an unusual inflection in the data that makes it harder to predict, right? So these buy forwards have created, and we mentioned this earlier on, gives an opportunity while you're paying more for the inventory and the storage of said inventory, you may be able to use a slower or cost-effective mode of transport to move those goods. So one of the things that early September ended a little different in late September is we saw an uptick in TL or truckload versus LTL, for instance. That tells you that people are consolidating loads more and they're taking advantage of a lower price point in the truckload market. But all these things are complex math that I think are still sort of feeling their way through this buy forward of tariffs and unusual inventory management practices that are influencing transportation logistics as well. Okay. So that's my broad comment. Okay. Yeah, the math is hard. Okay.
So the math is hard. Executives are obviously wanting to regardless of industry, wanting to position for this last quarter of the year and head into 2026 strong. There's no sign of letting up when it comes to general volatility over which they have no control, things like tariffs, things like geopolitical dynamics, all of that. So talk to us a little bit about the math. I mean, I think it's fair to say that given the increased complexity that we're facing, it may be a call to action for some executives and leaders in the supply chain to kind of upskill in this area, right? I mean, would you say like we need to have an increased understanding of what data means and the ability to interpret it? Is that what you're saying? Like, talk to me a little bit about.
I am.
Right,
So
PhD.
yeah, a little bit of a, and I promise I'll be brief and I won't get
Nice
too excited about this, but I do get excited about these things. So I like, as a tenured logistician, I didn't come into this with a degree in supply chain. Like many people my age, the degree didn't exist, right? But you did have people that were really good at mathematics and math and how math applies to time, distance, things that cost and things that are inevitably baked into the KPIs that we use to understand how to move product, where to put the product, how much to stock the product, et cetera. So mathematics is a fundamental part of transportation logistics and, broadly speaking, supply chain. Well, for a while, you were able to get away with using the abacus or simple math, right? But that isn't going to work anymore. We're into a time where we have to use what's called multivariate math. So I'm going to give a quick lesson on what I mean by that. So if you take a KPI like cost per shipment or cost per unit weight or some other generally applied KPI or key performance indicator around how we're performing overall in my supply chain, there are many influencers that influence that one number. So multivariate math is simply saying you have to understand all the influencers to know why my number is going up or it's going down. Okay. Well, given the number of variables you have that influence a number, it gets more complicated when you add more variables. The more variables you have, the harder it is to distinguish the influence of one variable over another. And then you have the interdependency of the variables on the whole thing. So my comment about the math being harder these days is you've got a lot more factors and variables in the math. And if you're still performing this math on an abacus or fundamental math, algebra, you're probably going to need to upskill to basic calculus level math because the math is harder these days. And the relevance of the data is also shorter. So if you looked at early September results versus latter September results, there were some changes that took place even mid-month, within intra-month. So that means the relevance of change is happening faster, and unexpected things happen. More recently with some of the changes with China, the trade with China, right? Or the government shutdown or whatever case variable it is. My point is you have to be good at math. You have to have the data. And by the way, AI is really good at multivariate math. It's a pattern analyzer. So, humans can only consume so many things at once and look at these variables, but AI is very good at looking all the variables. And so the magic wand in all this is, hey, my number is doing this. What are the 10 reasons why that number is doing what it's doing? And then you could take action on that to go figure out how do I influence that in a positive way. That's that simple. But the math is hard. And the math is going to remain hard, I think, because there are very transformational things happening, not only in transportation, but in how people buy product, how the consumer is aware of product, how the connection between brand loyalty and buying patterns, and then all the geopolitical and other events that are happening, trade negotiations and all that. So my theme today is you better get good at hard math because we're in a period where the math is hard, and the better you are at the math, the better you are at forecasting the future and predicting where things will go and being agile enough to make those changes, maybe on a weekly, monthly basis based on changes in the market. Okay. So that's my PhD. I'm going to take the PhD hat off and come back to the reality. But I just want to say that because I've thought about this a lot. And I really do think companies need to really upskill in this area and leverage technology and the data and the AI to do that.
Yeah, that's fascinating. And I appreciate it. I mean, you said it's very simple. I think I would fundamentally disagree, but I do appreciate that you simplified the presentation of that concept to us. Now, one of the things I want to circle back to, just because I'm interested, is, you talked about how we need multivariate math because there are more variables now, right? And so I'm just curious to know how you would define the increased complexities, and like what are those additional variables that supply
Sure.
chain leaders are looking at in their data sets.
Sure. Let's use a great use case. Let's use tariffs. It's a great use case, right?
Got it.
So a tariff isn't normally influencing my decision making. And if you asked me the question 12 months ago, we wouldn't have had this conversation around tariffs, right? So tariff is it's always been there, but it hasn't been a major influencer of the math problem. Okay. It just hasn't. It's been more driven by cost. Why offshore to a supply base? Because I can lower the cost to manufacture the product, right? Things like that. The transportation cost may be higher, but it's made up in lower cost of manufacturing the product. Tariffs change that variable significantly and sometimes very materially. Now we're yet to see how this is all going to play out, but certainly anybody out there that's shipping internationally is faced with decisions on a regular basis about where to ship that product from, and the cost to do that, factoring in something that's much more material than it has been in the past. So that's one of my new variables, and that changes. So we just found out in the last week that the trade with China now is amped up a bit, right? That was a little bit unexpected. Things were kind of going smooth, and there was line of sight to some deals that may happen, and that changed. So we'll wait and see now how that plays out, right? So there's some retaliation from the U.S. On that. There's some retaliation back from China on that with port costs and different things. And now, how does that play out in the numbers? You better be good at math, right? Now, you may not change anything, but it may change your inventory like it did early on mid-year in terms of how much you stock, where you stock it. It may shift your supply base around to where you're creating your inbound supply chain from. But yeah, that's a great example of a new variable in the math. No, I can assure you everyone's looking at duty as an aspect of cost of goods. Okay. Or the total cost of landed cost of shipping.
That's a good illustration.
Yeah.
So as we then face increased complexity, another component that you mentioned that I think is super interesting is pace, right? So that the pace of change, right? You mentioned intra-month even changes that we saw in the data. We used to be fairly content with kind of this 30-day cycle. And I think we used to be pretty content with whatever cycles we had for observing the data, for gleaning insights from the data, for considering it to be an adequate report on what happened and a forecast into what would. As we are watching the pace of things change, I mean, it almost feels like supply chain is looking like the stock floor. Like it's just, we're seeing things speed up really fast.
They are. Well, and I think that's part of why we have an inversion happening with capacity and pricing. My gut says that it caught everyone off guard. It caught carriers off guard a little. It caught us all off guard. So the decisions made early on are still impacting those numbers, and we all missed it. I say we all, the ecosystem of shipper, carrier, and anybody in between. So I think that's happening because things are changing at a rate, and things are happening, and decisions are flowing through that were not well predicted. So now, what normally is can be somewhat of a balanced, everybody's trying to figure it out. I think I mentioned early on about the lower investment of carriers in capacity, right? And truckload purchases, equipments. Mm-hmm. That's either going to play out to balance everything out, or we end up, I think I mentioned maybe 2 meetings ago that could create risk if there's a big surge end of year. We don't think that surge is going to happen. In fact, I think peak season is actually going to spread out more. I think that's another interesting variable here. Is, I mean, we may not see it as compressed, and that may be influenced by a totally different factor, which is how consumers buy product, brand loyalty, mm-hmm. and this whole concept of AI generated marketing, mm-hmm. and consumer engagement. Yeah. So these are all interesting variables that are transformational, happening to us now. I've never seen that transformation occur at the rate it's going as well. Mm-hmm. Nothing new about e-commerce, but that's a transformational change in how consumers buy product. So these factors all play into those numbers being somewhat unusual. Also, there's a big push to lower cost by carrier and by shipper. So again, those buy forward decisions that made months ago have created more consolidation and pricing advantage, which ultimately lowers the cost to ship product by shifting to a slower mode because you have more time. So if you have time to do that, you took the hit on the inventory increase, but you save it in the transportation part because you have more time to move it from A to B. So that's and you better buy the right stuff and stock the right stuff because consumers are still being very cautious. I think if we look at the consumer market, they're still sort of unsure. We're all a little bit unsure of the future. And so when you have uncertainty, that creates, it has an impact on discretionary buying, I guess. So deals are king. That isn't new, but doing that in the best way you can, knowing what product to have at the right place at the right time is really critical right now. So, and I don't see that changing. How peak season plays out, Joy, I don't know yet. We see a cooling, but the economy isn't necessarily in bad shape. We have a lot of positive things happening too. So we'll see, but be good at math and look at the numbers often, because things do change pretty rapidly in this market for sure. Yeah.
That's good. So pacing obviously impacts reaction time. How fast you've ingested and interpreted the data impacts how quickly you can react, right, to whatever is occurring. It stands to reason, as you describe it too, that executives are kind of faced with two big sets of data, right? We've got the data regarding what's going on out there, right, in the world, that's going to dramatically impact how they need to make decisions. And then also the data that's what's going on in here, right, in terms of inside their own company, which I think at Trax, we are confident still contains a great deal of intelligence that isn't capitalized on. And so maybe talk to me a little bit about that as you're having conversations with our clients, with Trax clients, looking at the data and the stories they're able to understand about their own inner workings, the savings they're able to recover, as you talked about cost sensitivity, things like that. Where do we find there can be recoveries and efficiencies and things like that when we look internal?
Well, I had mentioned earlier in our call today that the indices that I'm reading show shipper advantage right now from costing perspective. That doesn't mean that's going to sustain. That'll probably change, but that just means right as of right now. And certainly there's some pricing advantages more upstream than downstream. E-commerce doesn't seem to be as impacted by these fluctuations, and we have to be careful. And again, I think that the tariffs have influenced that time frame as well. But most companies are really wanting to forecast properly. It's a forecasting challenge. And so, to make the right decision, and then how long does that impact the cost, right, or the inventory and things like that. A lot of companies are going through major digital transformations right now. So there's nobody nobody that I've talked to isn't at least aspiring to transform their supply chain to make it more efficient and use data more effectively to forecast and predict outcomes. I read an article interesting the other day where there's an AI program now that is able to help procurement, where it all starts really, if you think about negotiating price, it starts with procurement, right? So I'm looking into the market. Now let's put spot rates aside for a second. Every large shipper is a balance of spots and contracted rates, right? And they pick and choose based on market conditions which one to use, preferably the contracted rate, because that secures that capacity with the carrier. The carrier knows that you form a relationship, and those are important, right? In the supply chain and certainly in transportation logistics. But it all starts in procurement. Well, there's some new AI technology now that uses demand data, it uses market conditions, and it uses different benchmark data to assist procurement in successfully executing a transportation bid. That now, again, these things aren't anything new, but it's never been done with some AI assist to it, right? So in other words, back to my hard math. The problem you have with using simple math is you hedge or you use averages. Simple math says, I don't have the complexity, I don't have the calculus, so I'm going to do simple math, which means I'll hedge, I'll be conservative, if you understand, and or I just use averages. We're not in a place where averages and hedging will bear out the results that you may want. So this digital transformation by shippers is critical to the sustainability and the agility to react, as we talked about earlier, in this type of market. So that's been a fundamental focus. And then, of course, maintaining brand loyalty in a very changing way of marketing product. So brand loyalty has become a big major focus, which involves service, all kinds of other aspects about quality that have nothing to do with sort of the hard math problem, but they have to do with how do I engage our customers to maintain that when our customer is getting bombarded with all these different methods and competition in the marketplace. So that's number one concern for the shipper, and a lot of shippers are going through that digital transformation today to better leverage and put a roadmap in place that gives them that agility and future state. But forecasting has gotten very hard because you can't just take what happened in the past and apply it to the future anymore. It's a much more challenging problem than that.
That makes sense. And what you just described, I think, was also kind of, when you talk about digital transformation, you're talking about across an entire organization. And there are areas of an organization that affect its operations, right? So that are more soft science, right? That are historically less data oriented. So you think about my department, which is marketing, and we do a lot of behavioral economics and behavioral monitoring, right, and things like that. And so historically we haven't been great at data in the marketing department, and yet, as you're saying, there are going to be factors that in what people's buying behaviors and things like that should be visible to supply chain executives as they make decisions at scale. So it's important that we think holistically.
I think what I'm seeing is if I can use a word, I'll make a word up. Operationalization of data, if that's a word.
Yeah. Operationalization?
Operationalization of data. What I mean by that is there are a lot of companies that I talk to that still don't have the data in the hands of the person that's making the decision.
Yes.
Now, maybe that was because the data wasn't trustworthy. Maybe people put proxies in place to scrub data so it could be presented in a simplistic way, but they're hurting themselves by doing that because the person making the decision, which is really what it's all about every day, doesn't have the data to know what that decision just did in terms of the downstream impact and how it affects the data and the KPIs I just mentioned. So there's a big push to operationalize data by pushing it into the people that are making those decisions in their day-to-day jobs and roles, and really creating an environment where you have that continuous improvement and learn, shortening that cycle, and especially, and again, in a rapidly changing environment. So that's a big push with all of these companies, and you're going to see a lot of that. That's what digital transformation is all about: is having the data at the time you need it, and based on what your role is and how you impact the organization. I picked on procurement earlier, but you can argue that that falls into finance, logistics, that goes into, because they're doing the forecasting. You've got operational logistics, and then you have the procurement organization, and then you have legal and the tax organization that's being, having to deal with different regulatory requirements worldwide in terms of, I call these people the ones that keep you out of jail, right? So you have to know how to do that as well. So, but all these people play really important roles in a successful supply chain, and they all have needs for data. And the sooner they can get that data and make those decisions, a company is in a much better position to navigate the changing market conditions that we see today.
Yeah, I appreciate that. I think part of what you said that rings really true is the fact that data has often been ingested, interpreted, and then presented. Right, it's been cleaned up and then put into a data visualization format, and then put into a deck, and then delivered at a certain frequency, right? Which we've talked about before. And I think one of the things that our clients really like about the Trax platform is that it does normalize, standardize, give dashboards, things like that. But there's also real-time access to the intel, so that the whole team can gain a shared understanding of the status of this at any moment.
That's right. That's exactly it. So if you think about it, if I spend 3 weeks creating a document that tells me what I should do,
right,
I get 1 week of leave before I have to start all over again and do that again.
Right.
So, that's a problem.
Mm-hmm.
You have to take that out of the equation. So having the data when you need it, at the time you need it, at the time the decision's made, is really critical. And yes, the Trax mission of data visibility and ease of access of said data, normalized data, is huge, right? Because no one can do the math without the data behind the math to create the outcomes. And if you're not doing that today, you are definitely falling behind where you should be in creating a sustainable, agile supply chain, for sure. No doubt about it. And again, we'll sit here and talk next month, Joy, about what happened in the last 30 days, and it'll probably reinforce again how much change is happening month over month. One last comment on rate of change. One of the things that the LMI does, which is one of the indices I look at, is I look for rate of change, right? Is something changing slightly, or is the slope more significant? And I saw a couple graphs this time where the slopes were more significant. That means that looking more frequently at that number is important, because will it continue that trend, or will it change? And so that's another reason to frequency and availability of data and visibility of good quality data is really, really important.
Yeah. Well, and
so there's my math for today.
That's all the math. The ability to train your mind like you have to know what you're looking at and what it means very quickly is important as well.
Yes.
And to that point, as our listeners are looking, and I'm thrilled today, we had over 2,000 people watching on YouTube. So it was an amazing group, and I'm excited that everybody got to hear your wisdoms, Steve. So, and whatever that word is, I'm going to Google it and see if it was really a word.
Multivariate math. So.
Well, I know multivariate math is a word.
Oh, operationalization of data.
Operationalization. I think that's our multisyllabic.
I didn't do so well in school in grammar, so I get a pass on that, hopefully. So
I should have won that one. So we'll see. But as everyone in the audience is looking at this and thinking, we have to hone our skills and our ability to interpret data and look at it. We have an incredible resource at Trax in that, Steve every month curates this incredible freight market report that is a look back at the month and in interpretation with his commentary on the trends as he sees them. So it's totally free. It's something that you can subscribe to. We'll make sure you have the link to be able to sign up. And it's a great way to just self-educate and have an incredible resource that kind of synthesizes all of the important data sources as he sees them for anybody who's leading in the supply chain and wants to become more efficient, more agile, and all of the good things that Steve mentioned. Awesome. All right. Well, Steve, thanks for the time today. This was awesome. For
Thank
nerding
you, Joy.
out.
Appreciate it.
And leading us in our thinking. We will see you next month.
Bye now.
Thanks.